What's up, guys? It's Bandit FX, and today is June 24th, 2021. This is my Asian session breakdown for gold. Um, let's take a look at the daily time frame on gold. Okay, so we had this massive sell-off on gold, and now we're starting to range here. We had a little support formed at 1760. Which was used as a previous support. So I'm just going to draw a little box here as our support level. Our most recent resistance is up here at 1793 on the 4-hour time frame. It's just a little bit easier to see than the daily, so we're just going to mark it on there. Jumping down to the 1-hour time frame. Let's make this a little bit bigger. This is basically just a massive consolidation. However, you can find trades within this consolidation because the ranges are so big. So looking at the 1-hour, let's bring this a little bit closer actually, just so we can start to mark out, our game plan here. And if you guys watch through my previous videos or any of my analysis videos, I break down every chart the same way every single time. And that's a good habit to get into, is always break everything down the same, have a system, do everything in order. That way, when it comes time to break down a chart, you can do it fast and efficiently, and you're not worrying about, oh, what do I have to do next? What did I forget? Just do it the same way every single time. Developing your own system is something that you guys should really get used to. So I'll typically break it down from the highest time frame to the lowest time frame, and then start labeling my chart once I basically have a game plan and figure out what I'm doing. So let me make this box a little bit smaller. I'll just delete it and create another one. So although you can't see this wick on the 30-minute time, or even on the 30-minute time frame or the hour time frame, I am still going to mark this down as a level because it was in the past a rejection area here as well. So this is also a support level. It just rejects very, very hard. So it's just something to keep in mind as far as take profit targets if we are going to be taking sells on gold. So obviously right now, gold is trending. It was trending downwards. We've been in the sloppy range this whole time, but price is starting to trend back up. We just broke above the most recent bearish candle. There was a very minor resistance right here on the 1-hour time frame. What we're going to want to see is a candle to close above this in order to take buys. But breaking it down to the 30-minute time frame, price action really isn't the cleanest right here. As you can see, the candles highs and lows and closes aren't really being respected that well. So this is typically something I'm going to avoid. We have this huge wick to the upside, wick to the upside, wicks to the downside. Candle highs and lows are getting broken. It's just very, very choppy. So this is not something that I would ideally want to trade, because the last thing you want is to catch yourself in a buy trade here and something like this starts forming. Very, very sloppy, choppy price action. That's not something you want to trade in. Typically, I like to look at it on the bigger picture. So looking at the hour or 4-hour time frame, it does look a little bit cleaner. Chances are we're going to come to the top of the range, but you never know with gold, as volatile as it is. So I tend to look for trades where price doesn't stay very often. So because price stays in this level very often, I'm not trying to take a trade where it has the potential to move sideways on me like it did right here or right here or right here. So it just doesn't make sense to do that, because you can't make money when the market's moving sideways. So what I'm going to look for is breaks above higher levels. So it rarely comes up into this level, and it basically moves in and out of it fairly quickly. And the same thing to the downside right here. You couldn't even see this on the 30-minute time frame. It wicked down here so fast and came right back up. Same thing down on this level. Price doesn't like to stay in these levels. It's very fast. So what we're going to basically be looking for is, I'm going to delete these zones right here because this is irrelevant. This is my no trade zone, and then we're going to look for sells below this level, buys above this level, because I do think we can get a quick push to the upside and catch, what is this? How many pips is this? 70 pips, 60 pips, and then to the downside, the bottom range we have right below where we're at, the first target is about 60 pips as well. So both scenarios work out pretty well. So let's start labeling the chart. Price is in a range. This is our no trade zone. Let me mark this. Usually I don't write that it's not a no trade zone, but I mean that it is a no trade zone, but because the range is so big, I just want to clarify that this is a no trade zone because of how choppy it is. Um, buys above, what level is this? 1788. Yeah, so we're looking for buys above 1788, and we are looking for our take profit one at about 1795, 1794, 1795. So, all right, so let's move this up here. Now, for the sell scenario, actually, let me draw the arrows for the buys first. Our no trade zone, this whole range right here. We're looking for buys once we get a break above this high. If it is in a high volume session because it's gold, chances are we're not going to get that retest price just going to shoot up. So if you are taking an impulse entry, just be careful. Just be aware that gold moves very fast, and you may not always get that confirmation on a higher time frame, such as the 1 hour. But if you break it down to the 30-minute time frame or the 15-minute time frame and you get it closed, that's probably a better confirmation to enter, because most of the times, if you just watch gold and how it moves, you don't really get the confirmation on the candle close. So let's move back to the 1 hour and start labeling our sells. So we're looking for sells below 1773. Sells below 1773, with our first take profit being this wick fill at 1767. Oh, sorry, I didn't mean to leave it. I just usually leave it as TP1. And then TP2 is down here at 1760, 1761. All right, so let's draw the arrows. We're looking for sells below the bottom of the range. Obviously, if you're taking buys or sells in this scenario, you have two options. Either place your stop loss below the current candle, or place your stop loss, I mean, above or below the current candle, depending on if it's buys or sells, or just put it somewhere back in the range and know that if the candle does close back in the range, that the trade is no longer valid. That's something very important, especially when you're trading breakouts of ranges, is you guys need to know that, if price moves out of the range and closes back in the range, don't just hope that it's going to break out again. Um, it rejected that area. So you took a trade based on a piece of information that price was coming up to the top and looks like it was about to break out. If you do take that impulse entry, and price does come back down and close back in the range, understand that it did not break out of the range. It is still ranging. And if it's still ranging, chances are it's going to come back down or come back up, depending on, if you took a buy or sell position, if it was at the top or the bottom of the range. So always keep that in mind. Manage your risk accordingly. Cut losses very, very early, especially if you are trading a breakout on something like this range here and price closes back in the range. So, yeah, guys, this is my analysis for Asian session for gold. Let me know what you guys think. Leave a like, leave a comment. I'm going to leave my Discord once again in the description. We have over 300 members. If you guys want to trade with us in the morning, 6:30 a.m. Eastern time, feel free to click the link and accept the invite. And if you haven't already, please subscribe.